You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. Welcome back to the network. Hope everybody had a great Thanksgiving Day, Black Friday, whatever the heck you celebrate out there here in the U.S. If you're all of our international listeners, hope you just had a great end of the week. I know it seems like the markets conspire against us whenever we are on hiatus. That's when they decide to move with gusto. So we have a lot to break down here. Of course, my name, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating network. Pleased to see so many of you folks jumping on board over the weekend there as well. Welcome to all of you newcomers. You know where to go if you want to learn more. theoptionsinsider.com/secret club. Don't tell anybody. It's a secret. And of course, if you're listening after the fact, like many of you do, keep rating and reviewing. It does help all these legion of new people who see a day like Friday and they're like, what the heck? Where can I turn to learn more, to discuss volatility, all this fun stuff? Helps them beat a path to our door. Of course, send in your own questions as well. We do love to hear from all of you folks out there. And before we hear who we're hearing from today, let's hear from the decade that was the 80s. By the way, have you seen that new movie, 8-Bit Christmas, where they're fighting over? It's kind of like Christmas Story before a Nintendo in the 80s. Saw it this weekend. It was pretty fun. Check it out if you are so inclined. But that decade that keeps on giving, that was the 80s. It also gave us pretty much the dawn of the modern era of professional wrestling. Some might say, like Uncle Mike, the best era that has ever been for professional wrestling. And so, as we are wont to do, let's kick off our broadcast week here with our fun game. Can you name that 80s wrestler?
The World Wrestling Federation, for over 50 years, the revolutionary force in sports entertainment.
Not a theme that immediately jumps to the tip of most people's tongue. I know it certainly did it for me. This guy definitely more of a, let's say, a B tier, perhaps even a C tier player out there in the annals of the legends of the 80s, like your Hulks and your Andres and those guys. He wasn't up there. He was more a couple of notches below. And probably not a theme that jumps to mind to you, but you can reasonably intuit it if you were paying attention. So let's go around the horn now. He's missed a few, so we'll have to let Uncle Mike, I think, sit for a little bit. As instead, I gave him first crack last week on good old Brutus the Barber and didn't come up with this. So instead, let's have the round robin continue. Let's go back out to the land of Texas. We're big fans of wrestling. He lives down the street from The Undertaker. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. A, how was your Thanksgiving, sir? And B, can you name that, let's say, C-tier 80s wrestler?
Thanksgiving was great. And 1 second. Hey, Taker, who was that? Oh, you're right. That's what I thought. Coco Beware.
Oh, Taker hanging out in the kitchen again. You know, he likes to pop by. Cup of sugar and maybe a casket he wants to borrow.
Yeah, he's having some coffee and caskets. That's what we have every Monday.
A little CNC in the morning with Taker.
Yeah, exactly. So, that was Coco Beware. And you're right, he was C-tier. He was one of those guys you'd see on Saturday morning on the half-hour show beating up some jobber. And then he would get in a major wrestling event and lose. So he was a jobber. He would beat the jobbers, and then at the main events, he was a jobber.
Yeah, I'm hard-pressed to think. He had the bird, obviously, but outside of that, I'm hard-pressed to think of anything else this guy had that was notable.
Yeah, he had the bird, and he would go, let's put it this way. He executed being a bird better than the Red Rooster. Let's just say that.
Yes, that's high praise indeed. Which I do believe was voted recently like the worst gimmick of all time, the Red Rooster. Look it up, listeners, if you are so inclined. Let's go on out now outside of the land of Texas. He's not having C&Cs on Monday morning with The Undertaker because he's busy watching your portfolios, listeners. He is Uncle Mike Tusaw, the newest star burning up the YouTubes over there. Mr. Uncle Mike, A, welcome back to the program. B, did you also know that was Coco Beware? And C, do you have any enduring memories of said wrestler, sir?
Yeah, I mean, I think there's some. So, yes, I did know it was Coco Beware. I think he's the only, besides the Red Rooster, who it's very impressive that Mark Sebastian knows that.
It could have been the Gobbledygooker. That's also bird themed, which ironically was what The Undertaker, that's when he debuted, and he was worried he was going to debut as the Gobbledygooker. He thought he was going to be in the egg. They said, nope, you're going to be Undertaker. Oh, that's much better.
that is much better. We should do maybe as like an event at some point. The three of us should have like an 80s wrestling trivia contest. I imagine with all the popularity of this segment, I bet that would get a lot of attention from our viewers or from our listeners. So something to think about for the future. But in terms of Coco Beware, for whatever reason, he couldn't get over, and I thought the crowds liked him. I think if they would have given him a little bit more attention, he could have been more popular. But I really liked him. I thought he had a great gimmick, but for whatever reason, he wasn't. He'd get the crowd super excited. I remember whenever he'd come into the arena, they'd get really excited. But for whatever reason, I guess he didn't have the wrestling skill to become a superstar, because if he did, then of course he would have gotten his shot to be the champ. But all the Hogans and the Andres were just much better skilled wrestlers, apparently.
I don't know if I'd say skilled wrestlers, but they definitely were good at the gimmicks.
They were more popular, skilled wrestler.
No one's going to sit there and say Hulk Hogan was a good wrestler, because he was
not. He was a champ.
He had that sweet leg drop.
Oh, yeah. Well, and the big boot, and he could...
Are you insinuating that it's not a real thing?
If you're the champ,
best.
He had the ability to scrape the back. Don't forget that.
Yes, the back scrape. Yes, the most devastating move.
Just was the worst wrestler, but he was good at having a gimmick, and I think everybody had their vitamins, and everybody else quickly realized, hey, this guy's not very good. I mean, WrestleMania 6 might be the worst wrestling match. It was biggest personality to wrestling skill ratio in the history of the WWF.
That wasn't Hogan and Macho, was it?
No, it was Macho was good.
I know, I say Macho was good, yeah.
It was Hogan and Warrior.
Oh, Warrior, yes.
Awful.
I love me some Warrior, but I could agree that he definitely had his faults as we keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. And hey, we all learned something today. Uncle Mike was the one kid in the 80s who had the Coco Beware wrestling buddy. All the rest of us, I had the Ultimate Warrior. I'm sure Sebastian there had probably had the Hogan. He could rip the shirt off. Uncle Mike, he had the Coco Beware. And maybe we should all beware these markets. Get that? Like that? I did that, listeners? Coming into Showtime today, because, man, we had quite the roller coaster over the past few days out here. You know, a half freaking session, and obviously that's going to contribute to it as well. Things are a little bit thin on the Friday session, but of course, we have this new Omicron variant, which just sounds intimidating. Sounds like it's from a sci-fi movie, doesn't it, listeners? That probably helps up the fear factor to 11. But of course, news of this new Omicron variant coming out of South Africa, which again, South Africa, quite the haven for these things of late, just spooking the hell out of everybody, sending the markets into a tailspin over the course of Friday. Massive sell-offs on Friday. And the big question coming into today was, will it continue? What's going to happen? We saw some overseas selling earlier, but coming into today, the markets were kind of inching their way up, and now the inching is done. They are firmly in the green. They're like, Omicron, what Omicron? Let's get the heck out of Dodge and let's start rallying again. Coming into the start of the show, the Dow is the laggard, up a mere 0.99%. S&P up nearly 1 2/3%. NASDAQ up over 2%, 2.1%. So there's a lot of green on then their screens. Listen, that's earlier today. They were kind of just inching. They were tiptoeing their way into the green. And now they're saying, you know what? This is it. We're off to the races. So the vol that had been skyrocketing now coming back in pretty aggressively. We saw a high of VIX of over 28. If you can believe that. And spoiler alert, we didn't have a show, obviously, on Friday, but there were no 28 handles in our prognostication. So if we had done a 1 week show, we all would have lost horribly there. So 28.62, I believe, was the high for VIX. When we kicked off the show, it was a little bit shy of the 22 handle. It was a 21.90. Looks like it's back up over 22 again, 22 and change, 22.10 now. Hanging out at the 22 level, but man, quite the fall from the 28 handle of not too long ago. VVIX coming into Showtime, as you might imagine, pretty frothy again, up about 12.5 handles, up to 127.5. VXX 21 3/4 when we kicked off the show. It's up a point. That one got as high as nearly 25, 24.66 out there over the course of the mad panicky sell-off on Friday. UVXY actually went up again. You know what it takes to do that. It's still up. It was up about 1.15. It was at about 16 3/4 when we kicked off the show. They hit a high of just briefly over 20.06, and then it turned right back to the downside. And Vol Q, when we kicked things off, let's see, it was at about a 19. Let's see where it's hanging out right now. 2060 right now, actually. So that puts it up about 1.6 points from where it was on last show. By the way, last show was, of course, a week ago, listeners. There was no show on Thursday. So there's a lot to unpack here. Mr. Meatball, if you could tell Taker to hold his coffee and caskets for a few minutes. We'll start with you as the winner of our Coco Beware challenge for today, sir. First off, what were your thoughts as all this was unfolding on Friday? We saw this Omicron race to the downside, and now this still Omicron-driven now race to the upside, sir, for today.
Well, my first thought was I was a little disheartened they didn't name it Unicron. And I was a little upset.
That would have been awesome. Yes, I would have been behind that.
Yeah, I thought that would have been a much better name than Omicron.
Orson Welles' greatest role. Come on.
Yes, I thought I thought it got a little overbaked, but you never know, right? They come out and over the weekend they say this thing is terrible. Everybody jumps on board. We could have been lined up for a really ugly day. But like you said, all things, knowing that liquidity's not there, that we'd seen VIX rising, all the things that make us think, yeah, maybe this is a little bit over the top, start coming into focus. And now today we've got a nice little rally. We're up. We've made back about 70% of what we gave away. Oil got way crushed. It still has to recover. The Dow today really a laggard. If you're sitting here and saying, "Hey, did I miss the pop?" look to the Dow because it was down 1,000. It's only up about 300 points today. So there's still significant upside just to get to where we were on Wednesday if you're looking for some sort of upside play. But volatility, still, we're above 20. We're trading around 22. But that being said, UBXY and VXX, here's why they stink, folks. They are barely off the kind of some of the lows they were trading at last week, getting absolutely demolished as VIX futures normalize and settle in here. So, that's kind of where we are today. We still do have some softness floating around out there. And then I guess the other big piece of news we'd be remiss is that here's how bad Twitter is. Jack Dorsey didn't even bother to use Twitter to tell the world he was leaving Twitter.
Yes, he chose the old standard of the press release.
Yes, you would have thought he would have tweeted, but no, to no avail. Yeah, instead, he puts out a press release.
Our listeners are asking in the live chat, how is it legal for Twitter stock to just halt when it is up 3%, even though Dorsey is stepping down from Twitter? There you go. That was news that was making the rounds out there quite a bit. That, he didn't use his own platform to step down from his own platform. Looks like Twitter, they're holding at about 46 3/4. Today it was at 52 almost, giving up the ghost quite a bit out there right now. Mr. Uncle Mike, I know you've started to use Twitter, so perhaps that has come across your radar of late, even though you're growing on YouTube as well. But walk us through the same couple of days for you. You're obviously our permabull here now. You come in on Friday morning, you're full of tryptophan, you're full of turkey, you're probably still kind of groggy from the madness that is Thanksgiving. Maybe you're scoring some Black Friday deals, I don't know. But you see that you come in, you hear this Omicron news, you see the market just in a terrified death spiral, and then everyone's on pins and needles all weekend long. Will we continue to sell off? And then it turns around and the market is back and the bulls are firmly in force yet again, sir. What was your take on this mad, insane few days, sir?
I think just over the course of the few days, I typically don't trade a lot during holiday times just because crazy things like that can happen. And so oftentimes you have to get stopped out of something that you normally wouldn't, because if there's lower volume, then that gives the lesser amounts of people more control of the markets. And so when we have old Omicron, to me, it sounds more like a Transformers thing from the 80s cartoon. We got Omicron coming as teaming up with the Starscream.
That's what he was saying. He was saying Unicron is from the Transformers movie, in case you missed that one.
Oh, got it.
He was the big planet bad guy.
Got it. So, but with that, I think that with where we're going with it on days where we have less volume, you just got to be concerned if you have a big move one way or the other. I think it was during the financial crisis one year, or it was in 08 or 09. I think the Dow moved like 900 points, like on a Columbus Day or one of those holidays that wasn't really a full holiday. And so when you have days like that, you really can't buy too much into it or sell too much into it for that matter, just because I don't think it's indicative of what the longer term market, and by longer term in this instance I'm referring to the next week, is going to bring. If we would have had a 100-point day in the S&P a week earlier, then I'd have been a lot more concerned with it. But just as it stands, my stance, I was, for my aggressive strategy, I was actually in cash all week and still am right now. I'm looking to make a decision on how I'm going to get back into this market later today, just because of the fact that we had such a huge, ridiculous sell-off. And it's one to where when you're looking at if Omicron is going to really be a bad thing, then of course the market will continue to go down, and travel will be bad and everything will be awful, just like it was before, and then everything will be awesome again. Who knows? But I just really think that there's times to where hitting the pause button is the valid thing to do based on an announcement, and based on what we had announced on Friday with the Omicron, I think that was the right thing to do. And believe me, on a 100-point down day, as much as I would love to get some deltas on the table, I didn't do it because like what Mark said, you don't know if all of a sudden over the weekend news came out of there's Omicron has been spotted in Illinois, Massachusetts, and Utah or something like that, then we could easily be down another 100 points in the S&P. But with it, for right now, it seems like everything is stable for right now. And even though we're at a higher level, I'd feel more comfortable buying in the market now at the end of the day than I would have on Friday at the end of the day, just because of the fact that we have some stability. But once again, I'm not putting my money where my mouth is just yet.
Yeah, a lot of opportunities for interesting things. Our chat's asking if anybody scooped any VIX puts this week. Mr. Meatball, I'm sure you guys on Friday, you guys like to look at some downside in the vol space. Any intriguing trades or scoops come across your radar as vol was skyrocketing north, sir?
Yeah, so it's hard to deny that the VIX 17 puts got to 20 cents. I mean, even on the open, things were really cheap. You could scoop up UVXY 17 puts, 16.5 puts, both for under $1, and they were a steal. I mean, the 18 puts just vol is getting smoked at a level that is almost as hard as it got rallied on Friday, and it could cascade from here if the market continues to rally. Again, keep an eye on that Dow Jones. That's the soft spot. Keep an eye on oil. If those don't catch a bid, then you have to wonder whether this is a one-day pop or whether we are heading higher. So that's where I'm at. But yes, lots of all scoops.
Yes, there are lots of scoops on both sides. Notice I got filled on some D's 20 puts coming up in a couple of weeks there. I didn't realize I got filled on those. So there you go. Those are looking pretty good right now out there. So I'm with you. Who was it said that? Oh yeah, Nichols. You said you picked up some D's 20 puts. I put a few on as well, just for the rainy day fun out there, because you're right. These are all kinds of crazy times. Speaking of which, if you guys have thoughts on where VIX will go, like for example, for that trade, it would be nice if it closed below 20 by the end of the week. Will it happen? Actually, these go out a few weeks, but still. Will it happen? Let us know. That's our question of the week this week. A pretty straightforward one coming back from Turkey Day. Get on over there to @options, make your voice heard. Very simple question. Does the recent surge in vol have legs, or is this a flash in the pan? Quite simply, where will VIX close at the end of this week? And we didn't give you any crazy ranges or anything like that. We just said it's going to be above 20 or below 20. And right now, it's a bit of a horse race. Above 20 losing 46.2, below 20 winning 53.8%. But again, it just went live right before showtime, so the voting is young. Get in there @options, make your voice heard. You can also vote with your dollars, obviously, and trade some VIX options, or perhaps spikes if you are so inclined. Those are getting a wee bit tighter out there, a little bit easier to trade these days. Speaking of trading, let's see what's trading out there right now. Let's get on out to VIX land first. VIX, as you might imagine, putting up some numbers today. Pretty much everything's putting up numbers today. It's one of those days, listeners. 470,000 contracts on the tape for VIX. That's not bad considering the ADV had just broken 400K just last week. Now it's back up to 428, so a little bit better. Obviously going to be back up again today. So some volume on the tape in VIX land. SPY, this paper out there. 4.25 million contracts as of a few minutes ago. The ADV almost 4.75 million. So yeah, they're going to hit that today. SPX, similar deal, already north of a million, 1.15 million as of a few minutes ago. The ADV about 1.5 million. So yeah, they're going to hit that today as well. The Q is already closing in on 1.5 million, 1.45 million. The ADV 1.6 million. So yeah, spoiler alert, probably going to hit that too. And man, small caps, don't leave them out of the party. 833,000 contracts up in IWM already. The ADV is 905, listeners. That's already super inflated, and it's going to hit it. So we're seeing paper across the board. Let's go on out now to the single names. I know a lot of you like to hang your hats out there these days. Surprisingly, not quite as active as you might expect, given how much action is going up in the broad indexes on a day like today. We've seen well over 300K to break into the top 10 of late. It's still an active day, don't get me wrong. 262 is nothing to sneeze at, but you could easily see 100,000 or close to that more to break into the top 10 on a day like today. And not seeing that today. But it gets us to Ford, number 10. Ford, 262,000 contracts. Is it a meme? Is it not a meme? I know technically if there is a textbook definition of a meme stock, Ford doesn't really meet it. It's not heavily shorted. It actually makes some money. But the price was pretty cheap. and it moved a lot. So from that latter, more subjective definition of a meme stock, it certainly qualifies. Either way, it's good for number 10 today, 262,000 contracts. Number 9, one half of the symbol twinology. We love to coin our phrases here. 264,000 contracts for AMC. Number 8, our old friend Creedence Clearwater Revival. No, I'm joking, of course. This is Carnival. CCL out there today, 268,000 contracts. Obviously, all these kind of reopening names like the cruise lines got pretty beat up over the course of the Omicron madness. Let's see, Carnival was trading last week up to about almost 21, about 2060, and then it took it on the chin on Friday, as you imagine. It sold off from about that level, a little over 20, down to 1738, looks like it hit on Friday morning, before rallying again today up to 1881 and then selling off again now, back down to 1772 and then rallying again. So it seems like the recovery in Carnival, perhaps not quite as sure-footed as the recovery in the broad market out there. Number 8, 268,000 contracts for Carnival. Number 7, Lucid. You know, it's a day that ends in Y. Something electric vehicle has to be in the top 10. Today we got Lucid there, 353,000 contracts at number 7. Number 6, it's Twitter. You know what's going on there. Twitter, 360,000 for number 6. So number 7, 353. Number 6, 360. Number 5, we've got Pfizer. Again, not a mystery why they're in the top 10 today. 396,000 contracts. So again, we're at number 5. We're not even past 400K yet. So that kind of shows you what a weird day it is out there. Number 4, AMD. Now we're finally over 400K. AMD, 406,000 contracts, the other half of the symbol twinology. Number 3, it's NVIDIA. Again, everybody needs chips. Nobody can get them. Hence, NVIDIA, number 3, 411,000 contracts. Numero 2. Yes, it's Tesla, back from the top spot. 691,000 contracts. And Apple, taking a bit of a rest. Still at number 1, but it's not quite the 2.25 million, whatever it was the last time we were talking about, when it was just lighting up the tape out there. Still looking pretty good, though, at 984,000 contracts, but nothing over 1 million today, and only cost you $262 to break into the top 10. So perhaps a little bit surprising given how much volume is on the tape today. In terms of earnings, we still have some afoot this week. We got Salesforce tomorrow. Wednesday, we got Snowflake. Remember them? They were the hot name for like a week. But they seem to have fallen off the radar. Let's see if they're falling off our earnings radar coming up on Wednesday. Five Below as well. They're going to be like Dollar Store. Dollar Store apparently, or Dollar Tree. One of them is now a $1.25 tree. I know Uncle Mike is going to really put a crimp in your clothing budget. But yeah, interesting stuff. Maybe Five Below will be $5.75 below now. We'll find out. Thursday, Dollar General. Yes, they're coming up. And then Kroger and Marvell. And Friday, we got Big Lots. We got earnings move results, earnings season, and now the newly minted earnings trades reports. Count them. 4 reports for you listeners, all available for free. How much do we like you folks? TheOptionsInsider.com. Options, news, and articles tab is the place to go to begin your journey. Again, you'd have to go to some research house and commission this and have them do this for you, or do it yourself with a spreadsheet, but good luck getting access to the data. That's pretty expensive. So instead, we do it for you for free. TheOptionsInsider.com. Shoot a note of thanks to the folks over there at ORATS while you're at it for making it all possible. As we keep on rolling, it is time to get weird. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get weird. Let's get wild. Let's get whimsical. Let us unleash the Eye of Sauron and see what it finds for us today. First, let's go out to CBRE. You've probably seen their signs in the downtown of most major cities. They're kind of on the commercial real estate front, a lot of office real estate and everything, which is, again, a challenge sector, I think, to put it mildly, out there right now. Ticker symbol, of course, CBRE. Let's look at their sordid tale. A year ago, they were trading 61.14. By the way, they're trading 98.91 right now, so a bit of a decent year for them. And it's kind of been a long, slow slog to the upside by, let's see, 61 was where they were trading on a year ago. And then by August 5th, they got up to pretty much where they are right now, $98. And then it looks like they kind of been vacillating. So it was faster than I thought. It was only took till August to get back to that level. and then it's kind of been vacillating in this 90 odd to maybe a little bit north of 100. Their 52-week high is 107.88. They hit that on November 9th, right around that time frame. And then other than that, they've kind of been pretty much vacillating in this mid-90s range since August. So a nice run from November of last year through August of this year, up a pretty decent clip, up from 61 to almost 198 bucks. And then kind of just vacillating, hanging out here, kind of losing some steam ever since there, which is kind of interesting. So let's see what our Eye of Sauron picked up. Actually, this kind of makes sense now, given what we just talked about with that stock chart. Looks like a bit of a roll here, a pretty sizable roll to be precise here in CBRE. In particular, we saw first a 20,000 lot of the DEES 90 calls going up for $9.73. They kind of split the uprights. The stock was, or excuse me, the options were $9.50 at 10.10 when these went up. These could certainly qualify as meafy. They are both beefy and meaty. That was about almost a 38 vol, about a 37.90 on the vol front. The stock was 99.18 when this went up. And then we also saw another 20,000 lot going up at the same time, hence a spread, which made us think roll, of the March 95. So it looks like they're rolling up and out also for 20,000, going up, let's say 20,000 times for 9.05. These were closer to the bid. The market was 890 at 940 when these went up for 9.05, so 15 cents off the bid there. And so that was strange because they both were kind of leaning towards the bid. And it's sometimes it's hard with options this wide to kind of get a sense for the execution. And also, there's probably going to be a stock leg with that. And that's probably why these executions are a little bit funky, because they can play with the stock leg as well in terms of how they put this roll up. There's got to be more to this story. So we said the Eye of Sauron, go back looking for more. And it did. And it found us that these DEES 90s were actually opened back on September 1st. So it's been nearly 3 months now for this trade. So they did them a while ago. They put on 20,000 of them back then for $10.10. Now, that time they were kind of almost lifting the offer against these. So it looked like they might have been buying these. But again, they were done as a spread. It looks like tied to stock. So the stock was 97.06 when they did this. So if they're buying options for 10.10 and then closing them out today for 9.73, then they lost money on that trade, I think it's fair to say. And if they sold stock against it, which it looks like they did at 97.06, the stock when they did this trade today was 99.18. So they lost about $2 on the stock. And then they lost, looks like about 40 odd cents on these options alone. And they obviously put more money to work back on the March side. So weird one all around, but looks like they're keeping the party alive. Mr. Meatball, what is your spidey sense telling you out there? You think they bought these and then are rolling these? You think they are buying the March leg as a result? Think they did it with stock or not? What do you think went on with this funky roll here in CBRE, sir?
Yeah, it definitely looks like it was done with stock, and I think that they're buyers. That's my guess. They're just giving themselves some extra time and trading through it. That's my best guess.
Do you like them tied to stock or untied, sir?
I mean, it's a weird one, right?
It is a weird one, yes. Hence the odd block.
Yeah, I mean, if the stock's going to take off, then sure. I guess it's all right, delta neutral, but it didn't need a ton of stock. I didn't think there was a huge change in delta there. So, definitely interesting that this trade. I'm going to be very curious to see what open interest looks like. I mean, they're definitely closing in December and definitely opening the DEES. It could be some sort of overwrite trade where they're just looking to collect premium and don't think CBRE is gonna do it. This one is really hard to read. I'd have to reach out to the broker and to one of my brokers and see what the actual story is.
Yeah, these are the fun ones with multiple moving parts, listeners, that the brokers can play with to play with the execution a little bit, to game the system a little bit out there. So if there's a stock leg, which it seems like there are 3 moving parts to this trade that all can be played with to make the execution that much more fun and intuitive. But it seems like, at first blush, it seems like they bought these DEES 90s against stock and then are now rolling them because if you're going to do these delta neutral, listeners, you need buying vol at that point. You need a big move. And it's interesting to see. They got a little bit of a move, enough to maybe keep them afloat. But we shall see. It looks like they're keeping that party alive through March. We're going to keep an eye on these. and come back to these bad boys as well, man. Our cup overfloweth with trades to watch here. Let's go on out now to Confluent Inc. It's been a while since we talked about them out there. Ticker symbol CFLT. Trading right now $84 and about a half. A year ago was trading $45. They've had a nice run. And they kind of hung out in that $40 range all the way through August of last year. And then pretty much started rallying. By September, they were trading 72. And then they kind of gave it up again down to the mid-60s. And they rallied hard in October from 63 and about a half all the way up to 93.60. So a nice run for them in early November. Then they kind of gave it back up. By just last week, they were trading $79 again. So they had a brief show of life and they kind of gave it up. And now they're kind of rallying again to where we find them today about 84.40. Still a good year, up about 87.5%. Nothing to sneer at out there, but an interesting couple of months out here as well. What did we find out here in Confluent? A little bit more straightforward paper, it seems like. Still sizable, though. We got the D's 65 puts. So, again, nearly 20 handles out of the money, going up for 66 cents. That's a fair amount of juice for these bad boys. That's an 83 vol, if you're wondering. Looks like paper sold them 12,556 times. Let's see. The stock was right about $82. The stock was lower when he got that. Explains some of this juice they got for it. But still, you're talking about 20% plus out of the money options. There are no earnings between now and December. Next earnings are on February 24th. So they sold nearly a 20 handle out of the money option. The stock was there a year ago. In fact, the stock was trading 63 around early October. So it's not inconceivable that it could get there again by December. But still, it's a fair amount of juice for an option that is 20 handles out of the money with a month to go or less now, listeners. Interesting stuff. Mr. Meatball, what say you? An 83 vol, 12,556 of these D65 line in the sand puts. Love them or hate them, sir?
You know, I do like high vol, and I do love a line in the sand on these. I don't hate this. This makes some sense. This makes sense, unlike that CBRE trade.
Well, they say if it makes dollars, it makes sense, right? And this has a good chance of perhaps making some dollars here. 66 cents they got for these. How would you do these? Listen, would you like these? Would you sell these? Would you perhaps keep your powder dry? Would you buy them? Probably not the latter, but maybe would you sell these? Intriguing stuff. They were 65 at 95 when these things went up. So they didn't play around. They hit the bid. They said, that bid's pretty juicy. We'll take it. Wow. That's a lot of juice for Confluent. But again, chart has been moving. So intriguing stuff as we keep on rolling to our final name. We're going back to corporate real estate, listeners, because why not? We're going to corporate office properties trust. Yeah, this is another one of these REITs. So many REITs we talk about here on the show these days. Ticker symbol OFC, trading right now right about $26, up about 3 cents today. On the year, it's been a more interesting. Actually, look at this. Is interesting. A year ago, it was trading almost exactly where it is right now. It was trading 26.06. So it's about 50 odd cents different from where it is right now. So net on the year, you could say it's been a whole heck of a lot of nothing, but actually there's been a lot of fits and troughs along the way. It got down to 24.80 on January 7th when all the meme madness kicked off and everything down there in DC was kicking off. Then it rallied almost instantly up to about 27.5 on February 4th and back down to 25 on March 2nd and back up to 28.20 on March 15th. And it did that multiple times and had a nice run there in May from 26.73 to $30. The high of the year, 30.5 on pretty much June 8th, right around our favorite day again. June 8th and 9th and 10th is when it kind of hit that lofty highs north of $30. They had a nice run then. And then it kind of sold off almost immediately again, back down to $27, June 29th. And then back up again to about almost $30 on July 20th. This thing has been very topsy-turvy for a net nothing year. It has had some movement, and then it sold off hard again in September from $28 down to $26. Again, this is all relative. The stock hasn't had the most enormous of ranges, but within that range, it has had a lot of movement. And then over the course of the last month, it's been selling off again. It was 28.5 back on November 5th, and then it's had just a drubbing. And Friday took it down again from 27.25 down to $26, where it kind of hangs out right now. So this one has had a turbulent year and a turbulent second half of the year as well, which pretty much erased any gains it had on the year now. So in fact, actually it's off now. It's off 2% on the year. So it's losing money on the year. So an interesting year for everyone's favorite name, a newcomer to the odd block. This is Corporate Office Properties Trust, ticker symbol OFC. What did our Eye of Sauron find out here? It looks like it found some puts again. Looks like we're going back to the line in the sand in commercial real estate. It's the Jan 25 puts, so $1 out of the money pretty much, going up for 71 cents, 7,280 times. This is a decent amount of juice, listeners, but not a huge vol. We were talking about an 83 vol for CFLT. We're talking a 27.5 vol for OFC, so a little bit of a different beast, but still, from a net juice perspective, very similar. Their stock was actually a little bit lower when these went up. Stock was 25 3/4. There are no earnings. Their next earnings are on February 3rd. So, Mr. Meatball, we got a similar line in the sand here. A little bit quieter name than our last name, a lot lower vol, but it's still a pretty hefty premium level for these Jan 25 puts in corporate office properties trust, sir. What say you?
Yeah, 27.5 vol for a REIT is really high. And they got a pretty darn good price given how wide that market was. I get why I went to the floor. Really, no earnings. That's pretty darn good juice. Getting almost 3% between now and January. I don't hate this at all.
Might have some trades for the Gamdar coming up here in everyone's favorite corporate office properties trust. Yeah, I don't hate these either. I don't hate either of these puts, but I definitely don't hate the latter ones as well. So yeah, interesting. What do you think of these two line in the sand puts, listeners? Which do you prefer? Hit us up. Let us know as we keep on rolling. It's that time, listeners. We all needed him last week because it was just crazy time. We needed him to talk us off the ledge. He's back here today. It is time for Uncle Mike and the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, again, we all missed him on Friday. We need him to talk him off the ledge in times of turbulence. So, Uncle Mike, sir, you're a resident permabull, a ray of sunshine here on a deeply cynical show. What's been lighting up your tape, and what do you got in store for us today in these crazy times, sir?
Ratio spreads, margin, and capital gains all in one. Are you excited?
Whoa. The hairs on the back of my neck are standing up. I'm getting excited, sir.
So let's say that you're looking to sell some stock. You own some stock and you're thinking you want to sell it. And just because either the market's high and you're just concerned about long-term capital gains, so you're like, well, I really don't want to pay the tax on this, but I definitely I'm kind of concerned about the market being higher. Well, a choice of what you can do, and I'm not saying this is the right thing to do, but something with which to consider, is that if you have a large enough portfolio, you could perhaps take out a loan on margin. Now, what does that mean? Well, let's say that you own $500,000 worth of stock, and we'll just make it simple. You own $500,000 worth of SPY, and you need cash for whatever reason, and you take out a loan. Let's say you want to take out a $10,000 loan, or you need $10,000. But you know that if you sell the stock, you'll have to pay taxes on that. You'll have to pay a little bit more, whatever the case may be, or even 100,000, 10,000, whatever number you want to use. And so when doing this, one thing you can do is if you use margin, all you're doing is taking out a loan. Now, the advantage of margin is the fact that you'll get to keep that stock working for you, assuming the stock is going up or SPY is going up. Of course, the disadvantage is that it could work against you and it's not your money and it could burn you on it. But let's say you have a longer term approach to this and you have the means with which to pay the interest on the margin. Now, when doing this, I would recommend holding your stock at a broker that has a very low margin interest rate. You can find them out there for between 1% and 2% annually, and you can find them for, quite frankly, less than that if you really look hard enough. And so the question becomes, do I want to pay this 1% interest rate on a loan, or do I want to pay a 15% capital gains tax? And the answer to that is a very definite and very definitive maybe. And so the way with which you can do this is if you really want to get around the tax. Let's say that you take out the loan and you pay, and I'm just going to use oversimplified numbers, you pay 1% a year for 15 years on this loan. Well, at that point in time, it's the same as what you would have gotten on the capital gains tax, let's say. And this is assuming no time value of money or nothing along those lines. But let's say you're paying this interest on the loan. At that same time, the stock is still working in your favor. So the concept would be is if the stock can increase while you're taking out the loan, the increase of the stock could potentially offset the cost of the capital gain. And then if the stock increases enough over a 10 to 15 year period, then you've made a better decision than simply paying the capital gains tax, because then you can sell the stock and then that makes up for the cost of the capital gain, whatever the case may be. Now, of course, I'm being very vague and very general in saying this because this is not a simple solution. Now, let's say that you're concerned that the stock's not going to quite appreciate as much as you had before. Well, there's a strategy called a 1-by-2 ratio spread, to where if you know that if the stock increases to a certain level, you know that you would sell it at that level because it would give you the amount of return that you would need. If you want to create extra leverage on the stock, you could, and I've talked about this strategy on the strategy block before, you could sell 2 calls, buy 1 call, and create a little bit more leverage on the stock itself. Now, of course, there'd be tax on the gain from the ratio spread, as well as the tax on the stock. But my point is that throughout all this, if you're really concerned with selling a stock and you really want to avoid the capital gains, there are creative ways around it. Now, of course, the other thing you can do is you can put a collar on it to protect the downside. If you're more concerned about the downside, you have that ability as well. Bottom line is this: you don't necessarily have to pay capital gains tax if you are concerned about the stock being too high or if you need cash. There's ways around it by using margin and options. But you need to have a very in-depth understanding how both of these things work. Margin interest rates are not fixed, folks. They could go up. And you might not get the fill on the ratio spread that you wanted as well. Also, put premium, if you're going the collar route, might be expensive as well. There are choices, and I would recommend that you explore all of them before making a decision.
There we go, listeners. Explore your options as we keep on rolling into, real quick, mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Weird week last week. Obviously, didn't have a chance to do a Mail Block on Thursday, so we'll start off by paying off our question of the week from last week. We asked you, in honor of the shortened holiday week, we thought we'd ask you, which market development or trend are you most thankful for this year? And you can always reply DM with your alternatives. Give you 4 choices: options, volume explosion, the meme stock madness, the crypto rampage, or the bull market breakout. You see, some of our producers like alliteration over there. And it was a weird poll back and forth that ended up with some weird ties. The options, volume explosion, and crypto rampage both tying, I should say, with about 33%. And then meme stock madness and bull market breakout also tying with around 17%. So weird poll, but the volume explosion tying with crypto, which is intriguing out there. This week's question, like we mentioned, which is going hot and heavy right now, we're asking you quite simply, does this surge in vol have legs? Will VIX close above or below 20 by Friday? And it has surged and rallied. I said before, below 20 was winning. Now it's literally tied, 50% each. No bias in any direction out there. So interesting stuff. What do you guys think? Let your voices be heard. Speaking of letting your voices be heard, Mr. Uncle Mike, we had a question for you. This came from Luigi. I believe this came on our live chat last week. We didn't have a chance to get to it, so let's get to it now. He says, I have a question for Uncle Mike. I watch a few weekend market shows, and Barron's Roundtable did a segment on how to use options. He says, does this fall into the category of your hairdresser talking about a stock? So I guess he's asking you, if Barron's Roundtable is talking about options, is that the moment? Is that the straw that breaks the back? Is that the canary in the coal mine, sir, that we need to get the heck out of Dodge?
I wouldn't think so, just because they probably talked about like protective puts as well as upside calls. So I don't know if I would necessarily say that's a canary in the coal mine per se. Valid point, though. It could be the case. But no, I think that they're, although they may or may not have done a good job on it, I wasn't able to see the segment, but because of the fact that if, and I do emphasize if, they made the segment along the lines, you can be bullish, bearish, or protective, then I think it would be okay. If it was something along the lines of this is how you can leverage yourself, then I would say it's a canary in the coal mine.
Yeah, Barron's a little bit more skin in the financial game than, let's say, your hairdresser or your cabbie or your Uber driver, to modernize that metaphor out there. So not quite the same thing, Luigi, but I get where you're coming from here. As we keep on rolling, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
It's fun to watch this poll. With every tick and VIX, we get new movements. Now, below 20 is just barely winning, 53% versus 47% for above 20. Get out there. Make your voice heard, listeners. It's hot and heavy, fast and furious out there on the old poll. You know where to find it. Twitter.com/options is the place to go to play along with all the fun stuff we do throughout the week out there. Let's go around the horn. Let's go back out to the greasiest of Meatball. Mr. Meatball, sir, if you can push aside the taker just for a second, sir. We'll get back to him in a minute. What's on your radar for the rest of this week until we can gather here together on Thursday, sir?
Well, I'm very interested in what the Omicron variant is going to do. Will it swallow the planet, or will we defeat it with the matrix of antivirals and vaccines? Then, you have to watch what's going to happen with the Fed and bonds. Does this slow them down? Bonds, again, we don't usually talk too much about it, but they made an incredible move on Friday. Take a look at TLT, folks, and then take a look at HYG. If you want to worry about something, watch that spread. If HYG is dropping as TLT is going up, that is a real problem. And that is the type of stuff that can actually spur a real sell-off. Now, we saw a weak sell-off in HYG on Friday with a boom out of TLT today. TLT off the touch, but still really strong. So keep an eye on bonds, because as bonds go, the market goes. I'm watching the VIX. Is it going to go below 20 by the end of the week? If I was a betting man, I would say yes. But obviously, we'll know more by tomorrow. I want to see if we have whether this is a one-day kick. So I really just need to see what happens tomorrow.
Well, you're making our chat happy. A lot of VIX 20 put holders, sounds like, in the chat, sir. So from your lips to the ears of the market, sir. VIX below 20. That would certainly make our poll interesting towards the latter portion of the week. Mr. Uncle Mike, sir, if you have thoughts on our poll, have at it. And B, more importantly, what are you keeping an eye on until we gather here together on Thursday?
I'm actually keeping a really close eye on how we close today. I think it's going to be a thing where if we can gain back at the end of the day all of what we lost on Friday, I think that would be a pretty bullish signal, but you never know. So I'm definitely watching that. And like Mark, I'm also watching the 10-year. We had the big rally on it on Friday. But once again, the only thing I would add to that is that we're probably about where we were a week and a half ago in the 10-year. And so it's going to, if we're going to have more fear on it, we're going to have to gain more ground before I become a 10-year fear man. But it's definitely a very fascinating thing to watch right now, because if we do get continued buyers in the 10-year, then we could be in for some troubled times in the S&P, but we'll see. So I'm watching the 10-year and the S&P fairly closely right now.
All right, listeners, that's going to do it for the old OB this week, but never fear. It's a regular market week this week, so we're back at you with all of our shows, including extras coming at you later today, of course, with the crypto rundown in about an hour, so stay tuned for that. Tomorrow, coming at you with a double dose. Got a great pro Q&A. You asked for him back, so he brought him back for you to pick his brains on all things futures and futures options and commodities. Hot areas these days, as you might imagine. Mr. Dan Gramza, the educator extraordinaire over there for CME and, of course, capital management. All the other things he does. The man can talk commodities for hours. So get your questions in. All these crazy markets are moving all over the place. Nat gas, crude, crypto, ags, metals, you name it. They're moving all over the place. Now's the time to pick his brain. He's the man to talk about. That's coming up tomorrow. Of course, check your email for the exact times. You'll get that newsletter in there. You should have gotten it already. With the times, you can set your calendar if you want to join us live. Of course, after the fact for all you pro members in your exclusive podcast feed. And then, of course, double dose tomorrow. You're also getting the advisors option. So I'll be back with the Oracle of New Hampshire to talk all things vol and everything else and what the advisors are out there doing to make this spot even easier for you folks out there from a options trading and vol perspective. But before we go, let's go back around the horn. Let's go back to the greasiest of meatballs, a.k.a. the winner of our Cocoa Beware Challenge today. Mr. Meatball, if folks are intrigued, they want to check out your Gamdar or anything else you guys got cooking, maybe a Cyber Monday deal, where should they go? What should they do?
Yeah, go to optionpit.com and make sure you're signed up for our email list. We put out amazing content every day. We are doing a Cyber Monday special, but you need to come to optionpit.com to check that out. Or if you want, you can email me, mark@optionpit.com, and I'll get you in touch with our people.
There you go. Get in touch with his people over there in the land of the pit. Uncle Mike is just one person, but he's blowing up all the different platforms, the Twitters, the YouTubes, and so on and so forth. Mr. Uncle Mike, if folks want to check you out on your myriad of outlets now, where should they go? What should they do?
Well, first off, I am not just one person. I have a team of experts behind me through RCM Wealth Advisors. One of those, George, actually was the Trader of the Year award given to him. You can find more out about that on our website. But with that, he actually had his strategy picked up by a mutual fund. It was so successful. But anyway, with that, if you would like to work more with a financial advisor who believes in the option product, if it's deemed appropriate, feel free to check out my website, stcharleswealth.com, or follow me on Twitter @MikeTusaw, TOSAW, or you can check out my latest YouTube video, What is a Call Option? I will have plenty more of those coming in the new year, working on a lot of them, and very excited for what's going to be happening in 2022.
Let Uncle Mike learn you some options. The place to start, of course, stcharleswealth.com. Uncle Mike and his team, his legion of experts over there, will help you out at stcharleswealth.com. We got to get on out of here. We'll be back in a little bit less than an hour now for the crypto rundown. Stay tuned for that. Then tomorrow, double dose of content, the advisor's option coming at you hot and heavy, followed by your Q&A with the one and only Mr. Dan Graham. So back on Wednesday for your double dose of education, OPR Options Bootcamp. Then back again on Thursday for episode 2 of the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.